Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Ethereum. Almost home. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, Ethereum is continuing to make this move into its lower logarithmic regression trend line. One of the things we've discussed before is how this normally plays out is you have sort of your initial wick into it with a very brief period of relief. And then as investors kind of accept what's happening, then Ethereum goes deeper into the regression band. The same thing happened in 2019 too, right? You had sort of a wick down into these levels, and the market tried to hold on, but then eventually ETH just fell deeper into the regression band. And of course, the same thing in 2016, right? You had, and actually 2016 looks a little bit closer to today than what the last cycle did. You first had a wick down, and then it moved back up, and then it slowly went deeper into the regression band. And so what we've talked about a lot before is how this relates to ETH Bitcoin, how it relates to all Bitcoin pairs. And this is why for so many years I have been so bullish on Bitcoin dominance, because I know what happened last cycle that allowed Bitcoin dominance to finally top. And it was a change in monetary policy by the Fed. The shift from away from quantitative tightening to quantitative easing. Now, I don't know if when the Fed ends QT, they probably aren't going to immediately start QE if what Powell says is true. He says they won't start QE until rates are back at zero. We'll see if they mean that or not. But one of the things I really want to draw your attention to is the process that played out last cycle through the lens of monetary policy. This breakdown is obviously painful if you're holding a lot of ETH. But you know how we've been talking a long time about ETH Bitcoin and how the most likely direction for ETH Bitcoin is down until monetary policy changes? This was that dilemma that investors had, is a lot of people didn't want to see ETH break support. They didn't want to see it happen. But they also didn't want ETH Bitcoin to keep going down. The problem is that for ETH Bitcoin to bottom, you probably need a change in monetary policy. But in order to have change in monetary policy, you have to have pain. Welcome to the pain. Right? This is the pain that you ultimately need. Remember, last cycle, ETH Bitcoin bottomed after ETH USD broke support. These support levels eventually broke, and then after ETH broke support and fell into the regression band, then ETH Bitcoin finally bottomed, because then the Fed ended quantitative tightening. Right, you see the purple line right here? That's where the Fed ended QT. That's where ETH Bitcoin bottomed, and it occurred after ETH USD fell below the support level. This whole thing has been basically a 10x move in the price of Ethereum. Everything that happened last cycle is basically happening this cycle. It's just taking place on a longer time frame. For instance, if you look at the higher low structure last cycle and compare it to this cycle, the main price that ETH had to break below last cycle to really go into the regression band was around $200. This time, it's around $2,000, right? It's basically just a 10x move. Furthermore, the first low last cycle was around 80. This cycle was around 800. If you go down to that wick down there, it was in the 800s. The next low was around 100, and then this cycle it was around 1,000. The next low was around 150. This cycle was around 1,500. So a lot of what has happened this cycle has just been a 10x of the cycle before. The reason why people are having a hard time navigating this cycle and why it feels so different is because monetary policy never changed this cycle. In the last cycle, we saw a change in monetary policy in the pre-halving year. We're now in the post-halving year, and we still haven't seen a change to, to the quantitative tightening. We've seen them taper it a little bit, right? They've slowed it down, but they never actually stopped it. And so you could have argued actually that maybe had the Fed not tapered back over here, perhaps that's when ETH would have just broken down back then. But they kicked the can down the road. It allowed ETH to go back up to this level, this 4K level one more time. And then now it's going deeper into the regression band. And one of the things that we've talked a lot about is if it plays out like that 2016 cycle, it's that last tag, it's that final lower low kind of that gets you into that regression band. And then maybe things can finally start to change. It certainly seems like this time is different. And I see that sentiment a lot. But if you go to the Advanced Decline Index, it really does show you why it feels different. Last cycle, the Advanced Decline Index of the top 100 cryptocurrencies was trending up starting at the end of the pre-halving year. But it was because we had seen a shift in monetary policy. This cycle, the ADI of the top 100 cryptocurrencies never actually stopped going down. So this cycle, we're still in this process, the process that comes before the pivot away from quantitative tightening. And you can see back then that the ADI just continued to drop. I'll scroll down in case you want to pause the video and read the description and the usage. But this is the process. And this has been hard explaining to people that this was always the most likely outcome. The one thing to consider here for Ethereum is that when ETH USD broke into the regression band right here, right, as it broke down into the regression band, that is precisely when all Bitcoin pairs took the plunge to the range lows. Maybe a little bit before, but that's around the time where all Bitcoin pairs took that final plunge to the range lows. So I continue to think that that is the most likely outcome. There's obviously been a lot of things that we've talked about that would likely happen. And a lot of those things can become memes if they don't happen quickly enough. But as always, business cycles take years to play out. One of the things that really became a meme was the idea of ETH ever going home. Now that it's going home, it doesn't really matter that we spent years talking about it. It doesn't necessarily change the pain. I think people can mentally think oh yeah, this is actually exactly what happened last cycle. But deep down, I think people were actually hoping that it wouldn't actually have to repeat and that the monetary policy view would not be valid. Turns out it was always valid. So just like it has taken a long time for ETH to finally break support and go home, it's also taken a long time for all Bitcoin pairs to break and go to the range lows. And I still think that is going to happen. Just because it hasn't happened doesn't mean it won't. And I think that's the thing that has been really difficult is that anytime, we talk about these theories and whatnot, just because they don't immediately happen doesn't mean they're not going to. Being directionally correct is more important. And all Bitcoin pairs have been trending down since 2021, suggesting this is all part of the same cycle. As crazy as that sounds, the devaluation of all Bitcoin pairs today is part of the same cycle that began the devaluation of all Bitcoin pairs back in 2021. Again, I get that that's a hard narrative to buy, but the chart shows you that all Bitcoin pairs are oscillators at best, and therefore they will likely go to the range lows eventually. Meaning that alt Bitcoin pairs should drop another 35%, altcoins against Bitcoin. Now, if the Fed changes monetary policy and they still haven't gone to the range lows, I might be willing to change my mind on that. But if I'm being honest with you, if the Fed were to pivot before alt Bitcoin pairs go to the range lows, you might see alt Bitcoin pairs rally. But I think that the Fed would likely have to reverse course on their monetary policy, and still you would eventually see all Bitcoin pairs go down there. So I'm still operating in the assumption that the most likely outcome for all Bitcoin pairs is to go to the range lows. And I think that Ethereum finally going home will allow that. Now, technically, quote unquote, home for Ethereum is right around $1,500 to $1,600. Okay. Technically, I mean, it's right around $1,500 to $1,600. The dollar amount changes basically every day because it operates as a function of time, but around $1,500 to $1,600. The lower part of the regression band is all the way down at around $1,000. right? Around 1,000. Now, what's interesting is that for Ethereum last cycle, you basically had, a macro higher low, right? Remember that 10x change? This low down there was around 120, which is why I've also suggested that, it's possible that Ethereum could eventually go down to $1,200. But if it does go down there, it might not happen immediately. It could be a process. If it were to happen immediately, I think that would actually be an easier market to navigate, because actually what happened in 2019 was that it didn't go down there immediately. ETH first fell into the regression band down to about 160. So if you're thinking about that 10x move, that would put it around 1600. Then quantitative tightening ended. Ethereum rallied from 1600 back up to, or sorry, from 160 up to around 220. And then it eventually faded down to the lower part of the regression band. So I don't know if it's going to take the same amount of time. Obviously you could argue that since the uptrend lasted this time a lot longer, maybe it takes longer to get deeper into the regression band. But I don't even know if it has to play out like that, because one of the realities of markets is that the markets generally take the stairs up and the elevator down, right? It's sort of a slow process going up. And then when the market goes down, it can just be a quick capitulation. So one of the things that I've learned about it is, focusing on explaining what process has to occur, I think is much more useful. That way, it's not about when it happens. It's just saying, hey, whenever this does happen, then the next part of the process can play out, right? So, for instance, like ETH Bitcoin, the idea of when does it bottom? Well, we know last cycle it didn't bottom until the Fed pivoted from away from quantitative tightening. That didn't happen until after ETH USD broke down, which that's what's happening right now. Now, back then, when ETH USD did break down, right, when it did break down, how many weeks did it take exactly? I guess you could argue it took about 3 to 4 weeks, about a month or so. This breakdown by ETH USD really started about late February, so the argument could be that maybe another week or two, which is interesting because that's when the Fed's next meeting is going to be, is next week. So, if ETH goes to that $1,500 to $1,600 mark, and then the Fed pivots away from quantitative tightening, if it follows last cycle, then you might actually see a rally by Ethereum on the other side of March options expiration back above 2,000. I think the tough part really deciphering is, will Ethereum, assuming it does go home, more fully. I mean, you could already argue it's kind of already there, to be completely honest. But, if it were to go to like 1,500 to 1,600, does it make a deeper move into the regression band, right? Does it go all the way down to around 1,000 like it did last cycle and like it did the cycle before that? And that's kind of the harder part. If Ethereum doesn't go down to the lower part of the regression band soon, then my guess is that on the other side of March options expiration, especially as you get out into April, there would be some form of a counter trend rally, even like maybe how you had in 2019. The other thing that's kind of hard to decipher is that I know a lot of people want the Fed to end quantitative tightening, and they very well could in March, but if you read the most recent FOMC minutes, sort of the median forecast is that they won't end quantitative tightening until the summer, about mid-year. So, a lot of it just kind of depends on how long they want to draw this thing out. Pain in the markets is ultimately what is needed to durably get inflation under control. You can't really solve the inflation problem in a durable manner without having pain in the markets. And so I do think there's some level of recognition that everyone needs to have that, like, in order to get to where a lot of people want the markets to be, Ethereum has to go where they don't want it to go. It was just like in 2019. I mean, like, I definitely in 2019 would have preferred that Ethereum had just gone straight up, but it didn't, right? There had to be pain first. Ethereum had to go down into its macro higher low. And then ultimately we got that rally right there. Now, we did get a recession that sort of threw things off course for a little while, but that's the process of the cycle, right? And I'm just trying to take this thing, 1 week, 1 month at a time. um, to try to talk about, what are these most likely outcomes. So the other thing that I want people to be aware of with Ethereum is if you look at the risk level for Ethereum, one of the things you'll notice is that in 2016 and in 2019, ETH ultimately fell to the zero point 0.3 to zero point 0.4 risk band. That's where it fell in late 2016 when Ethereum went home. In late 2019, when Ethereum went home, it fell to the 0.3 to zero point 0.4 risk band. And we're basically knocking on that door because you can see the Ethereum risk right now is 0.4. So if this truly does fall into that 0.3 to 0.4 risk band for a few weeks and you see Ethereum deeper into the logarithmic regression trend line, I know it's going to be easy to say that this time is different and everything. But my guess is that if it does lead to an end of quantitative tightening, then that could actually finally allow ETH Bitcoin to more convincingly bottom. And I think that's the hard part, is that, until that pivot in monetary policy occurs, it's always possible for ETH Bitcoin to, to ultimately go lower. But when ETH USD broke down last cycle, it was right around here for ETH Bitcoin. So it had a little bit further to drop, but not much. So I think we're getting close. In order for it to be more convincing, ETH, I think, needs to go a little deeper into the regression band, but ultimately you need to see that pivot by the Federal Reserve away from quantitative tightening. I hope these videos on Ethereum for the last few years have been useful to you guys. I know I've been criticized a lot for being too bearish on ETH, but ultimately, this is the process that I ultimately thought needed to play out. ETH Bitcoin going into this capitulation and ETH USD going home. And until ETH USD made the move home, ETH Bitcoin was going to struggle. In order for ETH Bitcoin to go back up, ETH USD has to go home. That's at least my interpretation. The last thing I want to mention, and then I'm going to have to run, is if you look at US interest rates minus the 2-year yield, the one thing that we've previously talked about is that this cycle looks like two prior cycles, the financial crisis and also 1989 to 1990. Obviously, it would be detrimental if it's the financial crisis on repeat. So if we try to remain optimistic and say, well, what if it's not that? Well, what if it's this? What if it's 1989 to 1990 by the S&P 500? If it's 1989 to 1990, then you basically have this move by the S&P where you had, a triple top followed by a lower low in the markets, right? You see that by the S&P. And I've talked a lot about that as it relates to Ethereum, because if you take, right, let's switch this over, it's on a log scale, right? So if you take a bar pattern here, and we copy this here, and then we overlay it with Ethereum this cycle, it doesn't look that different, right? I mean, it really doesn't. I know it can feel different, but there's definitely a lot of similarities in sort of these moves by the market, where Ethereum eventually goes into that final lower low, and that lower low corresponds to the recession. And if you overlay the logarithmic regression trend line for Ethereum, you can see exactly what I'm talking about, right? I mean, and it could certainly go deeper in there. I mean, it could go, it could look something like that, where you have your triple top, and then your final drop is just this outright capitulation, and then eventually you get a move back out of it. But this is actually something that you could have learned just by looking at interest rates minus the 2-year yield back in 1989 to 1990. I wasn't looking at the S&P and trying to figure out where does it look like ETH. I was looking at monetary policy and interest rates, and I just saw there was a similar time in the 1980s, 1990s that matched today. And then when I looked at that fractal, it looked a lot like Ethereum. The one last thing that I want to mention is if you look at the S&P divided by M2, this is actually the same level that it got rejected at right here in 1998. And this ended up being a 20% drop. And there was another massive rally after it, but that's ultimately where the S&P divided by M2 topped in 1998. But anyways, guys, we're going to go ahead and wrap it up there. Ethereum is nearly to that main area in the logarithmic regression trend line, so it's almost there. hopefully we can make, hopefully we can ultimately make it there and see pivots by the Fed and ETH Bitcoin bottom out. But those are my views. Thank you guys for tuning in. Again, make sure you subscribe, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.